Hi, my name is Kim Watson from the Pivot Trader. In this video I'm going to show you the COT report and how to use it. So first things first, let's just talk about the timing so you can put things into perspective. Okay, so the report is released once per week and it's released on a Friday after the US trading is closed. It shows the situation on that Tuesday before the Friday, basically. So it's showing you a snapshot of the market and the positions at the close of play on a Tuesday. I.e., it's not a timing tool, but it's a flash of the sentiment. So what does it show us? Let's just look at the show. It shows us the net holdings of different trading groups, i.e. the sentiment from those different trading groups. We'll talk about those in a moment. The trend in those holdings, i.e. what they're doing, are they getting bigger or smaller, are they bullish, are they bearish, shows us a trend of their positions. And it also shows us the individual net change in the past week, so it can give us a sign of things that might be changing. So that's what it shows us. How can we use it from this is it shows us the bias stroke sentiments of the groups. That's the sentiment, as I've already mentioned, to see whether they're bullish or bearish. It shows the trend of their bias, i.e. are they getting more and more bullish or more and more bearish, and it also shows the weekly bias at the time. I'm more interested in the upper two here, but that's what it shows. It can confirm the trend, although you can really see this on charts, but it's really confirming the trend from the sentiment point of view. And it can show us extremes in bias, where these big groups have literally been buying or selling, and there's no one else to really sell to. The market's getting effectively overbought or oversold, even from the big money. Now, I can't emphasize enough that this is the big money. It is not little traders they're looking at here. We can see the sentiment of smaller traders in terms of what they're doing using other tools, but generally smaller traders tend to go against the trend. Very often we'll see a bearish bias on a strong upward trending market, and vice versa, because they're looking for the tops, they're looking for the bottoms. The bias from the bigger groups is done purely on their own analysis, with probably some bigger scope, longer scope trending charts. They certainly won't be looking at a 5-minute chart. They'll be looking at the weekly, monthly, maybe even bigger term charts to make their assessments, along with a lot of other assessments that they're doing in terms of fundamental analysis. So you're looking at the big boys, effectively what they're doing, and only the big boys, and this is really a report of what they're doing. So let's have a look at the report itself. Now the report comes out, you can catch it on the CME Group site. It will explain, it will give you some explanatory notes there if you want to read them for the definitions of the groups. It's separated into sort of two groups. You've got the commodities groups, and then you've got the financial products. And what I'm going to look at here really is looking at the financial products initially. Well, I'll look at putting another video for the commodities, which are slightly different. As you've got to see, there's different players. You've got producers in commodities, so you've got producers, swap dealers, managed money, and other reportables. Whereas in financial products, you've got a dealer that's effectively holding the other side of the market. You've got asset managers, leverage managers, and so on. So let's just scroll down. Now this shows a chart. Let's bring in, so you can select what you want to look at. So foreign exchange. You can look at the major currencies, and you can select a major currency. Let's look. Now these are, just to make clear, these are, because it's dollar priced, all of them are priced, including the yen, as the yen versus the dollar, as opposed to the dollar yen that we would normally see on the market. So it's showing you the strength of that particular currency. So looking at the euro, for example, and it's the bias of the buy side of the currency. So this is what you get. Now I'm sure you'll agree with me, that's pretty. May not like the color scheme, but I find it rather complex just to get my eyes around it. Yes, you can simplify things, but let's just go straight to a quick alternative site. This is Tradingster. I'll give you the links below here. There's no point to go into great detail, but what they do here is just make things a lot simpler. So if we want to look at the euro dollar, for example, we click. Well, I should just go back and explain something there. You've got the COT legacy, and then you've got the COT reports. The legacy is the old format where they used to merge two of the groups that I want to see separately. They used to merge them together. They've broken those two groups up so we can actually see what the different groups are doing now, which makes more sense. So this is the first page you're looking at, or the first part of the page you're looking at, and yes, it's a load of numbers, but this is what I'm going to help you assess. First things first, let's show you what you don't need to be looking at, because there's no point. So I'm going to just cross that out. So you don't need to be looking at the spreads, you don't need to look at other reportables, non-reportables, so you can scrub all this out, not interested. And well, we might look at this in a later part of the video, but the real focus sits around these two groups in this area here, and in particular this group here. This is where I'm really taking most interest of looking at. This is the important bit to me. It's the asset manager, the institutional money, what it's doing. Leverage funds, why am I not so interested in them? They can be much more fickle. They often are completely opposite side of the market to what the market's doing. They will be possibly hedging trades or taking more aggressive view of the markets, and could be looking at shorting a market that's pushing up quite strongly, and it may be using contracts, futures contracts, as opposed to actually physical positions. So all I'm really interested in, or I'm mostly interested in, I should say, is this asset manager view. Then let's break it down some more and look at what we're looking at within that asset manager. I'm looking at their positions, so we'll look at the positions that they're holding, the long and the short. So their long positions, the asset managers are holding 383,000 against short positions 148. If you want to look at it as a view from a picture, there we go. They're 72% long, 28% short. That gives us a bit of a feel for their bias. Their bias then, the sentimental bias, is to the long side. Now, a word of caution. These numbers take quite a long time to adjust, so that's why I start looking at trend. Now the numbers below the key numbers here change, they're just a weekly change. So what's happened here, there's been a reduction in the short contracts. They've come off by nearly 4,500, and the long contracts have increased, so there's a net change of around about 6,500 or 6,400-ish contracts. So it's a bullish bias for the week. However, I really want to look at the trend. I can see the net long positions. That suggests to me it's very bullish, but what's the trend doing? And this is where I think you'll find some really good use, and I use it a lot. I'm really looking at, I'm going to leave the leverage money on for a moment. Leverage money is a bit flat on here, unless you take the asset manager off, and then you can see what the leverage money, they've been at pretty bullish. Now look, they're going bullish, whilst this is the market itself above. It's the euro dollar. That's been largely coming down. These have been going up. That's why I take less notice of it. I want to know, what's the big money doing? and that's more reliable to me. The more reliable view is looking at the asset management's money, or the institutional money. This, okay, it peaked around about the highs here, but the trend was down, and the overall trend on this chart here remains pretty much down. Yes, we have had this move up here. We had a slight flattening. We did have a move up. In reality, it's not a very good chart, but we did have the move up. But this, for me as a trader, yep, I can see that. So really longer term, is still erring on the bearish. Maybe, I mean, technically, when you start looking at this, you could say, well, it's still in a, well, has been a bit of upward trend. You could be drawing trend lines across it. It's broken that trend. For me, when I'm trading, looking at swing trading, day trading, the bias to me is still the bigger bias. The easiest route may be still down. Yes, we've had this little upward movement on the weekly charts here, but it's sold off in this current week, even though there was a slight change. But yep, in the bigger scheme of things, where's this trend? Well, the trend is downwards. So to me, it makes sense to be following this. Shorter term is down there. The bigger term is still arguably down. So the bias is to the downside. So they're sentimentally bearish on the market, or the sentiment is bearish overall for me as a trader. So that's the euro. Looking at it that way, let's clear this and change that. That's it. So it tells me that, as I said, so there's three things you're looking at in summary. Then you're looking at the net overall positions, you're looking at the trend, what they're doing down here. This is more important in terms of trend. Yes, it may be just turning the corner here, and yes, we've seen a little bit of a trend change here, but a bigger picture has been quite biased. And then we're looking at what the weekly picture is, just to get a sort of a snapshot of the view of things. But in terms of trend is the key thing. They are slow, so don't expect things to happen fast. And the most important thing is here is the technicals. The price that's actually happening is the most important, regardless of looking at what these guys are doing. What the price is really doing. If it's suddenly getting bought, it doesn't matter what happened historically here. Remember, this is historic and it's just a feel. It's what's happening at the time. If suddenly the euro's really getting a lot of buying going into the physical markets, into the spot markets, well, then probably we should be on the buy side of things, because that really represents the supply and demand. And if the demand is high, but it can be fickle, and we can see these rallies coming in. We've seen over the last 3 weeks, we've been seeing the euro dancing around, possibly in a bit of an upward trend. Bit difficult to try and work out if you look on this chart, but it's very much up and down in that in those last 3-4 weeks. Okay, so that's given me the positions in that respect. So that is how to use it, or how I use it in particularly, and how it should be used. It gives just a broad guide of where the money's going. Now I'm going to show you two things. I mentioned about the trend. You can look at the trend. Now this chart's not going to show me the trend I want to show you. I'm going to change charts for this. I'm going to look, because the reason I can't show you on here is because it had, in fact I might be able to. Let's go out further. No, need to go out much further. There we go. I can show you. Let's just keep the same chart. Let's not try and all I wanted to show you is this zero line, where you've got a point of the zero. Basically, net short positions, it will be below zero. Net long positions, it will be above the zero line. So it's suggesting their bias is bullish. Now you can see on this, in fact it's better than I was going to show you, but you can see here this is over all of the period that's covered in here, from the 3rd of April, or the 4th of the 3rd, whichever way that's written around, 2012 through to the 3rd of the 31st. So it's it's the 4th of March through to current time frames. I was just looking at these dates down here, through to current time. Now if you look at where the zero line is here, you can see, yep, it was still trending down here. So the market was pushing up a little bit there, money was coming out of it. Technically you don't want to be selling it before the price has changed, but as the price starts changing, well then you can be using this, and it gives you more confidence to be on that short side, even though there'll be traders around the tops here that will want to be selling it. But if you've seen the signals, whatever it may be, and it's starting on the shorter time frames to be selling off, you feel more confident, and you can be looking at holding positions maybe longer on the downside the more this is running. Of course it's not a timing tool, it won't get you in and out, but what it does then, as I said, in terms of trends, when it goes from a negative net position to a bullish net position, if I can pull into around about this area here, when it went there, it was suggesting they were becoming a trend towards the upside. Now the trend wasn't necessarily shown that technically, it took a bit longer, and in fact they went down in 2017. So that's the bear that in mind. They can sit in this and they can start, but they were building positions, and they were building positions all the way through this. So their bias, when we were seeing a floor in the market back in late 2016, their bias was bullish. So when you're starting seeing that, well, you can think, well, actually everything's looking quite bullish here. I can start buying. I can, if there's signs in the market, I can be on the bullish side of this. As I said, it's easy when you come back here, as Harry Hindsight would say, and get in there and look for examples afterwards. It's a case of timing and looking at price always. Sometimes these guys go particularly quick. You can see the bias at the moment is to the downside here on here. It's certainly showing in this bigger map. It's changed, or starting to change more significantly. It peaked up back here in funny enough June 2021, and it's been quite bearish since. The markets themselves, you can see they've been relatively bearish since. Okay, so that was that one. The other thing it will show you is extremes in the market. I'm going to show you this on the Canadian dollar. Actually, I'll show it on in the New Zealand dollar, because it's one that's a bit easier to be manipulated effectively, and to me it shows a lot more. Now this is the extremes of what the dealer's having to cope with. In other words, if everyone gets bullish, the dealer has to be on the other side and be bearish. Everyone gets bearish, well, the dealer has to be bullish. They have to hold the other side of the trade, so their positions go up particularly high. And all we can do, if we can go to a maximum on here, you can see at times when it gets extremely, you can only look back in history. It's very much a case of looking back at history and saying, well, crikey, that's the dealers. It's quite overdone down here. Probably it's broken the prior lows there, or it's back to these lows over here. In terms of dealer positions, so everyone's already bullish, or pretty much bullish. So you can watch this market potentially come off a bit. Now it's not a timing tool. In fact, when it was back here, 2018, 2019, it went around about the same time on each year. Actually, it started changing, and it got levels not previously been hit. So the market had been very much sold off there, and at that stage, well, it gave us an opportunity to look at the market, wait. There's quite a lot of market on upside between the lows here and the move. So put things into scale. That's quite a movement. So you can trade some of that and make 300, 400, 500 points potential, 300 points net maybe. There's some scope. So when you see these and you start seeing them coming off, that's the time you can maybe start reacting, but always look at what the charts are doing. That is it for me. I'm not going to do anything more on here. If you like these sort of videos, please do subscribe to my channel. Give me a thumbs up, always makes me feel a bit better. And I wish you all the very best for your trading.